Hey, you have Patrick Findaro, co-founder of Vetted Biz here. Today, I just want to talk a little bit about the coffee industry, particularly in terms of franchising. A little bit about Vetted Biz. We're a marketplace for franchises and businesses for sale. To date, we've reviewed 1.3 million small business administration loans, as well as 5,000 plus franchise documents. We have about 100 franchises available on Vetted Biz. About 40 of those franchises available on Vetted Biz are coffee concepts, where they either serve coffee as a primary source of revenue, or it's really the main reason people are going to that franchise. Coffee, honestly, I have a little bit of a love-hate relationship with it, not just because I'm switching back and forth between tea and coffee, but in terms of an investment side, as you have to be very careful when investing in the coffee space because it's something that people are passionate about. Why not open up a coffee shop? It's something that people have thought about in the past. And before this pandemic, it was great to have that third place. So you have your home, your office, and then the third place, which is the coffee shop. So Starbucks revolutionized that concept as having a third place, and you have companies like Panera Bread that rode that bandwagon in a different capacity in terms of focusing not just on beverages but also on sandwiches, soup, etc. But with coffee, especially now in the pandemic, you have to be very mindful in terms of what the customer flow is like, and is it a franchise business that you're more reliant on, commuters, that are regularly going to the office, but now you look at some metropolitan areas like around New York City and flow is down 80% plus. So that's a big item. And with coffee, oftentimes the investment to sales ratio is way off. So we've looked at a lot of different concepts, but one that recently came up with a client is they have an investment range of between $200,000 and $600,000, but the average sales is only $400,000. And talking to franchisees, we discovered that the margin was around 10 or 12% for an owner that's not working day to day in the business, but is doing more administrative work and maybe allocating 5 hours a week, 10 hours a week. So when you think about that, say you're investing $400,000 of your hard-earned money and you're only making $40,000 a year out of that coffee business, do the math. It's going to take a while to recoup that capital. Now, looking at some other options, you could go the kiosk model, where you're betting on the uptick and rebound from this pandemic. And some areas of the country have already rebounded quite well. And I'd say that's really on a city by city, county by county, state by state basis. So having a low investment, say 70,000, 100,000, 150,000, where you're still hitting the sales of 400,000 or 350,000 or clearing 500, $500,000, that could make sense because you invested substantially less capital at say $150,000. You're doing sales of $400,000 and you're taking home $40K, $50K a year. You can recoup your capital in like 3 years, as opposed to my first example, which is a pretty reputable coffee brand. And I was astonished when I saw that many franchisees, it's taking not 4 or 5 years to get their money back, but 10 years on average to recoup their capital. So our analysts, as I mentioned, have gone over 1.3 million SBA loans. And we've reviewed thousands, 100,000 to be exact, franchise loans. So a little statistics as it applies to food and beverage. Over the last 10 years, for every 9 franchisees that have paid their loan in full, 1 has defaulted. You compare that to independent businesses, non-franchises that are operating in the food and beverage space, and it's 8-1. So for a food and beverage franchise in the subcategory of coffee, franchising typically makes more sense when you look at the historics over the last 10 years than going the independent business where you don't have the initial and ongoing support from the franchisor. That's not always the case. Stay tuned to some of our research on Vetted Biz, and I'll be talking about some of the other industries that we advise clients on. And just, in terms of different models, you have the kiosk model where it's generally very low cost, and that could be operating in a subway, a mass transit, where you're opening up for as low as 100K, 80K, and there can be a pretty fast payback and high return on investment. And then you also have concepts like Starbucks that actually operate as licenses, and they reward sophisticated licensees, typically operators that already have restaurant experience in the US and are willing to open up multiple locations and meet certain net worth requirements. But when you're looking at some of these more established brands or ones that really focus on being the third space or doing a lot of drive-throughs like Dunkin' Donuts, which was actually just acquired a couple of days ago and taken private, you can have substantial sales where you're clearing $1 million. So I'd say there's the kiosk model that makes sense for a lot, where it's relatively low investment amount, and you're getting your money back in a pretty fast time horizon. And then you have the more traditional third place like Starbucks, where the investment could be up to $1 million or more, but you're going to be having sales of 1 to 3 million, and you should have that steady customer flow, as well as you can offer other items depending on the franchise concept. I want to just quickly share my screen just to talk a little bit about different concepts that do serve coffee. So you have Rush Bowls, where they provide smoothies. They've been really capitalizing on healthy food, and as well as coffee is one of the items that they sell. Another one would be Crepe Delicious. And for both these concepts, Crepe Delicious and Rush Bowls, through our website, you can reach out directly to the franchisor to schedule a call directly with the head of franchise development or a senior executive at either Crepe Delicious or Rush Bowls. So I encourage you to visit our site, Vetted Biz, check out these listings. And then I just wanted to quickly show you, I mentioned Dunkin'. So Dunkin' Donuts was recently acquired for billions of dollars just a few days ago and has been taken private by a major group that also owns other franchises. But Dunkin', they have 8,000 locations throughout the United States. Taking a look at some of the metrics, you can see the closure rate. It's around 1-2%. 3-year rates 4.4%. Not super high, but it's definitely something you want to learn about if you're looking to invest into Dunkin' Donuts. Talk to the franchisor, talk to franchisees. Why are these locations closing? It's really important to understand if it was location, change of the business model, or if perhaps they're moving more to just focusing on drive-throughs, and a lot of the closures are the non-drive-through locations. And you can see the growth rate here, total number of openings over the last few years. A lot of the franchisors have been a bit late in terms of filing their FDDs for 2020. So we're coming up with the data on closures, openings for 2019. And you can visit us on our site. Stay tuned over the next couple of months. We've already uploaded information for about 900 of the 1,700 franchises on our portal to have the most current updated information for you. So we're constantly looking at getting you the latest, best franchise information so you can make data-driven decisions. Again, coffee industry, it can make sense for some, but you got to really look at the investment amount when the reasonable expectation to recoup your capital. So looking at the sales, and we already know what the industry average is in terms of a profit margin, anywhere from 10 to 20%. It can also vary if you're working day to day as the manager. But looking at a few of the different options, whether it's a kiosk model, just doing drive-throughs or relying on takeout to a lesser extent, or having that third space. So I see those three models rather. And then if you're somewhere in between, you're the neighborhood coffee shop, and say it costs you $200K to invest and you're only making $300K, probably doesn't make that much sense. If you're a lifestyle entrepreneur and you want to be the one that's also serving and filling in for the baristas, and you're less concerned with making money, that could make sense. But we really encourage you to talk to as many franchisors as possible during the discovery period. Go on our site, Vetted Biz, as well as talk to franchisees. Understand the numbers from franchise locations that are already open, and whether that's been for 6 months, a year, 2 years, get the information from them, the franchisees that are running right now coffee franchises across the US. Again, this has been Patrick Findaro, co-founder of Vetted Biz. I hope you enjoyed this live stream, and stay tuned for some other ones on some of the most popular industries that people are investing in franchising. Thanks.